All right. Hey, good afternoon, everyone. It's Hector Aguilar once again from the Aguilar Realty Group, brokered by eXp Realty. I'm here joined by my associate, Ben, your agent. His last name is Pei Champagne, but it's easier to
Yeah,
just say Ben, your agent. So,
Henry.
wanted to thank you guys all again for joining us today on our weekly video. Today, we chose a topic that I think is very, very important and also very common in today's market, and that topic is contingencies. What is contingency, or what are they, right? So right
Yes.
now we're seeing, a lot of activity on the market, tons of offers being made, and contingencies are a part of a transaction. So first, I wanted to explain what contingencies are. Contingencies are conditional protections that provide, if you will, like a protection to the buyer and also to the seller, right? If you
Yeah.
get your offer accepted, the first contingency that actually goes into place is your physical inspection contingency, right? So those are going to be inspections. That's going to be a physical inspection, a roof inspection, plumbing inspection, electrical inspection, pool inspection. Any one of those inspections is going to give you a report on the condition of the property. Okay, so those are inspection contingencies. It's typically a period of time that you're allowed to do those inspections in order to figure out whether you want to move forward with the purchase of that property or not. Assuming that you've already completed that stage, the next contingency is what we call an appraisal contingency, right?
Yeah.
And that's the one that's kind of a key in this particular market right now. An appraisal contingency particularly provides a protection to the buyer that they're purchasing a home that is absolutely appraised at the price that they're purchasing. In other words, the bank wants to make sure that if I make an offer on a property for 600,000, that the value of that property is at least 600,000 or more. Now, in this market, many appraisal contingencies are being waived, and I'll explain that to you in a little bit. But that's what an appraisal contingency does. It gives you the protection to make sure that the property is worth what you're paying for it. Okay. After you get over the appraisal contingency, then you have a loan contingency. And that's a protection to the buyer to make sure that their loan gets approved. Because unless you're paying for the property cash, right, Ben, you
Yeah.
have to get a loan approval. And so a loan approval can have many conditions, time of employment, credit explanations, FICO scores, source of down payment. There's so many requirements or guidelines that a borrower must meet in order to get a loan approval. So a loan contingency is in place for a period of time. Right now, the standard loan contingency is about 21 days, but we're seeing that sellers are shortening those periods to about 14 days on average.
Yeah.
So you have 14 days to get your loan approval. And once you get past that, then you're able to get to what we call clear to close and order your loan documents and then successfully close, right?
Yeah.
So there's a couple of different contingencies that are in place right now that are in the marketplace. And I wanted to discuss that because right now, a contingent property is a property that's listed. That means that a seller has accepted an offer, but they've chosen to keep the listing active in case the buyer's contingencies aren't met that protect the buyer, right? So what does that mean? Let's just say for whatever reason, the seller doesn't feel comfortable with completely tying up the property and actually going pending. What they're saying is they would like us to keep the property active on the market, continue to do showings, continue to receive offers in the event that the offer that they've accepted actually cancels due to their contingencies, right? So that's what it means when you see a property contingent. Now, the other difference is, what is a pending property? A pending property is a property that all the contingencies and the provisions that those contingencies provide have been successfully met and being met and removed, pardon me, and that the sale is going to proceed. So at that point, when it's under pending, it's pretty much a done deal. Okay, barring a life event or things of that nature, it's going to close, right? But in this market, what we're seeing is, more importantly, is many sellers are selling their home because they can get a lot of money for it, right, Ben? And they're
Right.
taking that money and they want to move up. So
Yeah.
that's called selling to buy.
Yes.
And a lot of my sellers, like the family that we're helping here in San Bernardino, their main concern is, Hector, I do want to sell, but I don't want to be homeless. And it's a
Yeah.
valid concern, right? They don't want to have to be in between homes. What if they don't find a house? So this is exactly what a seller purchase a replacement property contingency is. It gives the seller the protection to allow them to look for a property that they want to purchase. In the meantime, they've marketed and possibly already got their home under contract with the buyer,
Right.
right? But this protection is incredibly important. Let me tell you why. Because it could be possible that the sellers may not find the adequate home. Maybe they're out there making offers and they found it a little bit difficult to get their offer accepted, because a lot of sellers right now are kind of maybe not shying away from contingent offers, but they certainly prefer offers from buyers that don't have to sell. And that's the truth.
Yeah.
However, it's our job as your agents to present a powerful offer, a copy of your seller net sheet, and maybe a copy of your loan approval to demonstrate to the seller, like, look, hey, I've got my property on the market. Now I even got it under contract with the viable buyer. And here are my qualifications. Would you please accept our offer so that we can buy your home?
Yeah.
So that's what a contingency of a replacement property means for a seller. And honestly, in this particular market, we're seeing that quite a bit, right? We're seeing people taking advantage of the market. They say, hey, you know what? I'm in a smaller home. I think I need some more space. Maybe they're having another kid. Maybe they want some more yard. And they're saying, hey, you know what? Right now is the right time to maximize the gain of our house, that we can buy up a larger house. So that's what we're seeing in the market right now.
Hector, I want to interrupt.
Yeah.
Someone, Angel, gave us a little fire with a
hey, right on, Angel. Thank you, Angel, for your support. I appreciate you watching our videos and giving us your feedback. We're trying to bring valuable content to our marketplace and educate our consumers. So thank you, Angel, for your vote of confidence. We appreciate that. And then obviously once we do the sale contingency, their concern is I don't want to have to move twice, right? So we manage what's called a concurrent close, which means we're going to close the escrow on the sale of your property, and within 5 to 7 days, we're going to close the purchase of your property. So what that allows you to do is not have to worry about moving twice, maybe having to store stuff. We alleviate all those headaches by doing a concurrent close. So in closing, what I really want to express is that right now the market is in demand. There's a lot of buyers that are pre-approved. Interest rates are still hovering around the 2.7, maybe under 3%. Now, I'm not a mortgage banker, but I keep a tune on what's going on in the market. As professional real estate agents, a lot of consumers ask us, hey, where are the rates? What's the market like? And we give them a ballpark, but the important thing is always talk to your loan officer, whether it's a credit union or whether it's a commercial bank, or whether it's a mortgage banker or mortgage broker. They're the ones that are going to give you the best information. They're going to have the best pulse on what the rates are doing. And it could differ. It depends on your FICO scores. It depends on your income. It just does a lot of factors, right? And depends on the program you use too.
Right.
But there's a lot of buyers that are out there in the market that are pre-approved, ready to buy. So, if you get your property sold and you want to move up, or maybe you've overgrown your property. Maybe now it's just you and your spouse and it's time to retire and look for something smaller, something that has less maintenance, or maybe you're thinking about relocating to a different state because you're looking to save taxes, or maybe because you're on a lower income or a restricted income and you're looking to make your dollars stretch. Believe me, now is the time to list your home to sell. We can definitely help you with that. We'll help you with all your contingencies, whether it's your inspection, your appraisal, your loan contingency, and most importantly, your sale contingency. Let us help you. We are well experienced with that, and it'll be an honor to serve you in selling and buying your next property. So again, we want to thank you for tuning in. Ben, I always appreciate you being with me here on these videos. I know that you bring a different perspective to our educational videos, and I hope that this helps our consumers as well.
Yeah.
So without any further ado, we ask you guys to stay tuned for our weekly video next week. And again, if you're in the market to buy or sell, or someone that's in the market to buy or sell, or even refinance, reach out to us. We'd love to work with you and refer you to a professional that will help you as well on the mortgage side. Thanks again for tuning in. This is Hector Aguilar of Aguilar Realty Group and Ben, your agent. We'll see you next week, guys. Take care.
Thank you, guys. Have a blessed day.